Assalamualaikum and good morning. Today we will present about financial analysis between Eco-World Development Group Berhad and LBS Bina Group Berhad. This is our group member, Nur Izzatul Shazwani binti Muhammad Rusdi. I'm Mimi Nur Hamiza binti Zahari, Nur Fatihatul Farhim binti Kamaruddin, and Nur Albaniah binti Mahad. The Eco-World Company Goals. Company Vision. Eco-World is driven by its vision of creating tomorrow and beyond. Company mission is to achieve company vision through a culture of excellence and teamwork by... Okay, now is about company overview. Eco-World Development Group Berhad, an investment holding company which engages in property development activity in Malaysia. Its property portfolio comprises township, integrated commercial development, high-rise apartment, and green business park. The company has a land bank of approximately 8,126.4 acres. It is also involved in the supply of building material, manufacture and trade of prefabricated and precast components, and promotion, marketing and other activity related to property management, as well as provision of project management and building and construction services. The company was formerly known as Focal Aims Holdings Berhad and changed its name to Eco-World Development. LBS Bina Group Company Goal. Company mission should be an internationally recognized developer, building and inspiring delightful space that enhance community living. The company mission is to consistently deliver exceptional performance through progressive creation, releasing value to all stakeholders and enriching community at large. LBS Bina Group is an investment holding company which engages in the provision of management services. It operates through the following segments: property development, construction and trading, management and investment, motor racing circuit, and others. The property development segment develop residential, industrial and commercial property. The construction and trading segment include the design and build, civil engineering, trading of construction material and general construction activities. The management and investment segment focus on investment holding and management services. The motor racing circuit segment represents motor racing development and management. The other segment comprise of tourism development, hospitality, provision of finance through money lending, insurance agents, selling of insurance membership card, and manufacturing and trade of roof tile. The company was founded on 20 June 2000 and is headquarters in Petaling Jaya, Malaysia. What is financial statement? Financial statement is a combination of the income statement, the balance sheet, and statement of cash flow. Evaluation is done through the computation of financial ratio. Financial ratio is to restarting the accounting data in order to identify the financial strength and weakness. It allows comparison of the company performance over time as well as its performance relative to its competitor in industry. Financial evaluation helps an investor or creditor to check whether a business is doing better this year than it was last year, or whether it is doing better or worse than a company in the same industry. In order to do that, they must get 3 to 5 years of data to determine the financial performance of an organization.
Liquidity ratio measures a company's ability to pay debt obligation and its margin of safety through the calculation of metrics including the current ratio and the quick ratio. There are two types of liquidity. One is current ratio, The formula for current ratio is current asset divided by current liability. For the quick ratio, the formula is current asset minus inventory divided by current liability. A high liquidity ratio indicates that business is holding too much cash that could be utilized in other areas. A low liquidity ratio means a firm may struggle to pay the short-term obligation.
This is a comparison table for current ratio and quick ratio for company LBS and EcoWorld from 2015 until 2017.
So we have two types of liquidity. One is current ratio and another one is quick ratio. Compared to EcoWorld, LBS have a good current ratio and the quick ratio is up to 1% and they are able to paying their short-term obligation. Meanwhile, EcoWorld current ratio and the quick ratio decreased from 2015 until 2017, which is below at 1% at 2017. This suggests that the company is not able to pay off their short-term liability with the cash. Dividend payout not given by EcoWorld. From our observation, they believe it will do the better job of increasing its value and therefore a better job of increasing its share price. By reinvesting its earnings, we choose not to pay dividend. After go through their annual, they use the money to start a new project, acquire new asset, repurchase some of their share, or even buy out another company. Compared to LBS, who pay the dividend payout from 1.4 in 2015 for 1.69 at 2016, and the last one 2017 at 2.39.
A leverage ratio is any one of several financial measurements that look at how much capital comes in the form of debt or assesses the ability of a company to meet its financial obligations. The leverage ratio category is important because companies rely on a mixture of equity and debt to finance their operations, and knowing the amount of debt held by a company is useful in evaluating whether it can pay its debts off as they come due. The debt ratio is a measure of financial leverage. A company that has a debt ratio of more than 50% is known as a leveraged company. Its debt ratio is higher than its equity ratio. It means that the business uses more of debt to fuel its funding. In these cases, both companies still having their debt ratio stable. EcoWorld Sdn Bhd slightly increasing compares to LBS Bina Sdn Bhd decreasing pattern. Advantage to LBS Bina Sdn Bhd having a low debt ratio, meaning that they are low riskier than EcoWorld Sdn Bhd.
The debt ratio is a measure of financial leverage. A company that has a debt ratio of more than 50% is known as leveraged company. Its debt ratio is higher than its equity ratio. It means that the business uses more of debt to fuel its funding. Leveraged companies are considered riskier since businesses are contractually obligated to pay interest on debt regardless of their operating result. Both companies still having their debt ratio stable. EcoWorld Sdn Bhd slightly increasing compared to LBS Bina Sdn Bhd decreasing pattern. Advantage to LBS Bina Sdn Bhd having a low debt ratio, meaning that they are low riskier than EcoWorld Sdn Bhd.
Time interest earned ratio is an indicator of a company's ability to pay off its interest expense with available earnings. It calculates how many times a company's operating income can settle the company's interest expense. A higher times interest earned ratio indicates that the company's interest expense is low relative to its earning before interest and taxes, which indicates better long-term financial strength. Time interest earned for Equals and Berhad are not stable compared to LBS, Binance and Berhad, which are having increasing pattern for the year 2015 to 2018. Higher times interest earned ratio indicates that LBS Bina having an advantage rather than Equals and Berhad in terms of long-term financial strength. Companies typically try to turn their production into cash or sales as fast as possible because this will generally lead to higher revenues. So analysts perform fundamental analysis by using common ratios such as the activity ratios. Activity ratios measure the amount of resources invested in a company's collection and inventory management. Because businesses typically operate using materials, inventory, and debt, activity ratios determine how well an organization manages these areas.
Collection period. The average collection period is the average number of days between the date that credit sales were made and the date that the money was received, collected from the customer. The average collection period is also referred as the day sales in account receivable. From the graph, we can see that LBS still need to improvise in managing the collection period. The average collection figure may be unusually high or low. A low figure is considered best, since it means that a business is looking up less of its fund in account receivable, and so can use the fund for other purpose. Also, when receivable remain unpaid for a reduced period of time, there is less risk of payment default by customer. Total asset turnover, a ratio that measures the asset activity and firm ability of generating sales through its asset is total asset turnover. To compute its the net sale have to be divided by average total asset. This is a total asset turnover graph between LBS and EcoWorld. In general, EcoWorld have better improvement of the ratio because the higher the ratio, the more turns, the better. But whether a particular ratio is good or bad depend on the industry in which your company operates. We can see from the graph, LBS are simply more asset intensive than EcoWorld, so their overall turnover ratio will be lower. Profitability ratio. Profitability ratio are a class of financial metrics that are used to assess a business ability to generate earnings relative to its revenue, operating costs, balance sheet asset, and shareholder equity over time using data from a specific point in time. Formula: profitability ratio, operating profit margin, operating profit divide by sale, profit margin, return on asset, earning after tax divide by total asset.
Profitability ratios are a class of financial metrics that are used to assess a business's ability to generate earnings relative to its revenue, operating costs, balance sheet assets, and shareholders' equity over time using data from a specific point in time. Operating profit margin measures what proportion of a company's revenue is left over after deducting direct costs and overhead and before taxes and other indirect costs such as interest. Operating margin is used to measure company's pricing strategy and operating efficiency. It gives an idea of how much a company makes on each dollar of sales. High or increasing operating margin is preferred because if the operating margin is increasing, the company is earning more per dollar of sales. For these cases, there are significant increasing pattern of Ecowas and Berhad throughout the year 2015 until 2017. Meanwhile, for LBS Binance and Berhad, There is slightly decrease in the year 2016 and 2017. Overall, companies between both company LBS Bina Sdn Bhd having a higher margin than the EcoWorld Sdn Bhd. Return on asset (ROA) is a financial ratio that shows the percentage of profit a company earns in relation to its overall resources. It is commonly defined as net income divided by total assets. Return of asset (ROA) for EcoWorld and LBS is shown below. The return on asset ratio measures how effectively a company can earn a return on its investment in assets. In these cases, EcoWorld and Bhd ROA are increasing throughout the last 3 years compared to LBS Bina Sdn Bhd, which have a decreasing pattern of ROA. Although the ROA for LBS Bina Sdn Bhd decreased, but still the ROA is higher than EcoWorld Sdn Bhd.
Market value ratio. Market value ratio are used to evaluate the current share price of public held company stock. These ratios are employed by current and potential investors to determine whether a company's shares are overpriced or underpriced. The most common market value are as follows. Dividend payout ratio formula is total dividend divided by net profit times 100. Price to earning ratio formula is market price of share divided by earning per share. Asset turnover ratio formula is net sales divided by average total asset.
This graph illustrates dividend payout not given by EcoWorld. From our observation, they believe it will do a better job of increasing its value and therefore a better job of increasing its share price. By reinvesting its earnings, will choose not to pay dividend. After go through their annual report, they use the money to start a new project, buy new asset, repurchase some of their share, or even buy another company. This graph illustrates dividend payout not given by EcoWorld. From our observation, they believe it will do a better job of increasing its value and therefore a better job of increasing its share price. By reinvesting its earnings, will choose not to pay dividend. After go through their annual report, they use the money to start a new project, buy new asset, repurchase some of their share, or even buy another company.
Price to earning PE is the one most popular ratio. Formula is being used by investors for valuing companies and taking investment decisions. It may be interpreted as the amount that investors are willing to pay to receive 1 unit of earning. Generally, LBS show a higher PE. However, a stock with a higher PE ratio is not necessarily a better investment than one with a lower PE, as high PE can indicate that the stock is being overvalued. On the EcoWorld side, has a low PE ratio, it may indicate that the stock is undervalued. Sometimes, a low PE ratio reflects a genuine lack of the growth potential.
In conclusion, we can see that both developers are doing very well in the business and have a bright future ahead in the service area. However, LBS seem to have been doing a good job in better than EcoWorld. EcoWorld still need to improvise in managing their profitability indicator because some of the ratio only show slightly increase between years. EcoWorld need to manage their profitability in order to have more money in less investment and to indicate an outward profit as well. Probably to measure a developer ability to generate earning related to sale, asset and equity. Thank you.